Crude prices rose back above $110 per barrel on Monday, driven by fresh drone attacks in the Gulf. Rising oil prices pressured stocks and bonds. Analysts in capital economics are sounding the alarms. They say global oil inventories are draining at a record pace and that, at this rate, the emergency reserves will also soon run out. The biggest risk to global energy is still the Strait of Hormuz. Capital economics bet that if the strait stays closed through June, Brent crude could hit $140 a barrel soon. And if oil climbs to $140 to $150 and stays there into 2027, inflation could hit nearly 10% in the UK and Europe. That will likely push the world towards a global recession. The fallout is hitting financial markets hard. Asian stocks fell on Monday, Japan's Nikkei slipped, South Korean markets have dropped over 2% from recent highs, and broader Asia-Pacific indices remains in the red. Last week, China's markets hit their highest in over 4 years, but will have to weather data on April retail sales and industrial output later in the session. Wall Street futures also point to a red open on Monday. In yet another sign, investors fear central banks will be forced to raise rates again to fight inflation. US bond yields surged sharply last week. The Federal Reserve is now seen as having a 50-50 chance of hiking rates this year. The dollar gained strength, while the euro and British pound both took a beating last week. Amid the gloom, one name is keeping investors on edge: Nvidia. The world's most valuable company reports earnings on Wednesday. Its shares have already surged 36% since the month of March. The results will be a key test of whether the artificial intelligence boom has real staying power. A Gulf on fire, oil at over $110 per barrel, and a market waiting on one chip company. It is without a doubt a week to watch.